Buenas tardes. ¿Cómo les va? ¿Bien? ¿La conferencia hasta ahorita? Bien, regresando con la programación. We're going to get back to the programming here. If you can hear me out in the hall, come on inside. This is going to be the big one. This is a panel we're going to do on Bitcoin Treasuries. We have a true panel of all-stars here from the Bitcoin Treasury space, and so you're getting a real treat here on who we've got. The title of the panel is ridiculously long. Transitioning traditional business to Bitcoin Treasuries, real-world case studies on profitability, liquidity, and shareholder value creation. That's a long title. They're going to be giving you what's happened in the Bitcoin Treasury space in the last year or so and where it's going. The host is Tim Kotzman of Bitcoin Treasuries Media and the Bitcoin Treasuries podcast. And then we have Charlene Fadarepo, Jamie Knowles, Ben Werkman, Scott Elam, Roland Talalas. Please welcome this outstanding panel.
Thank you, Mr. Julien. Hi, everybody. I'm Tim Kotzman. We've got Ben Werkman with us, Charlene Fadarepo, Roland Talalas, Scott Elam, and Jamie Knowles. Is it Knowles? That's correct. Okay. I'll be moderating this panel while I'm losing my voice. I'm having too much fun in Madrid. These answers, especially if we start with Ben, could take a while, so I'm going to ask like 3 questions at a time, right? Just choose your favorite part of your favorite question. Why should any company treat Bitcoin as a core treasury asset rather than as a speculative investment? And what is actually preventing most executives right now, almost halfway through 2026, from making that shift? How do you maintain high Bitcoin conviction, maybe in this market, with shareholders when your average acquisition cost could be, and sometimes with some companies, is above today's price? And does that scenario change how you communicate the strategy? Final first question. Bitcoin is down roughly 35%. I'm not doing public math, but it's down from the October 2025 high, all-time high, and is only recently recovering. For companies holding Bitcoin right now, how do you manage the board and the shareholder conversations during a significant price drawdown? And does that change your treasury strategy in any way?
I think this is going to be the full panel now. It's just right here. I mean, the first question, part one of the first question, is one of the most important ones that I think companies are grappling with right now. There's a journey you have to go through as an executive team to get comfortable with what asset outside of the traditional options, right, the US dollar, whatever your fiat currency is local, if you're going to change the capital asset that you're going to use on your balance sheet, and you're going to transform your balance sheet into something that for most of the world is unrecognizable, you have to have an unwavering faith in that asset. And for an asset like Bitcoin, it was always difficult because the volatility was so intense, right? This is a wild ride that a lot of us have been on for a very long time, and you have to get comfortable with the idea that volatility is not risk. Volatility is a feature of the asset. It comes into play with the fixed supply and then the market dynamics around it. And so you have to go through the journey to understand that first, and you need to make sure that you've got the buy-in from the entire executive management team before you get there. Because if there's any wavering in conviction, it's very easy to try to pivot to what was comfortable before, right? It takes away your opportunity to truly transform your company and move it into something stronger and future-proofed. It's not comfortable to do. And I can say that because we came out into the public markets in September of last year. And I'm sure everybody in here is very aware of what that ride looked like after we got the high in October. Every single capital markets activity we've taken has been during the time Bitcoin drew down from 110 at the time we started doing it, down to the lows, 50% down. And so with your investors, the biggest thing you have to do is be willing to be out in front and constantly facing them. The worst thing you can do as a company executive would be to hide when things get difficult, right? Because you are that beacon to them saying, we're building towards a new future. right? We're taking a new path that has not been blazed before, right? This is very short. Even if you look at strategy, it's 5 years, 6 years, right? So it's a very short time frame. So we're doing something revolutionary, and we're trying to launch products on top of the hardest asset that man's ever created, and that's going to come with trials along the way. And you're going to have to be ready for that, and you have to be ready to constantly be out there communicating the vision, helping them understand that what they're seeing and feeling is a feature of this asset, and it's the reason you need to be able to take a very long-term outlook on this. There was a lot more to your question, but I'll let someone else get in there too.
Thank you so much. So I'm going to answer the question about what's holding executives back. There's a gentleman from Cartwright, the head of Treasury from Cartwright, that made an incredible statement. He talked about the fact that if you're going to implement a Bitcoin Treasury strategy, you're essentially working with 5 different areas of your company. You're working with legal, you're working with risk management, you're working with compliance, you're working with the investment committee, and then you're working with the executive committee. And if you have shareholders, you're working with those too. And so when you're trying to implement this strategy, you have to make sure all of those people are on board. You cannot go to your board and give the Bitcoin sovereignty ideology pitch. It dies. It doesn't work. Your risk management group wants to know, do we have the liquidity structure in place? Your auditor wants to know, is your custody structure in place? There are all of these questions that you really have to answer. And so what we're finding, if you take a look at the case of Amazon, Microsoft, and I think Facebook, they pitched Bitcoin Treasury strategies for all of their businesses, but all of those proposals died. Why? Because they were two-page proposals that were based on Bitcoin ideology and not based on risk management, not based on liquidity management, not based on compliance, and all of the regulatory controls that you need in place to actually execute a strategy.
Great answers. So I'll want to maybe take a spin a little bit and tell you what we are as a company. So GIGA Inc., my name is Roland Talalas, and we're privately held. And I think our angle will be a little bit different than some other companies like Ben and some other people will speak about. So our journey started in 2021 as a company with Bitcoin on the balance sheet. Got inspired by Saylor in 2020. And I think for us, definitely convincing executive in the board, which in this case is myself, that was an easy one, right? Because it's easy to convince yourself. But you have to believe in Bitcoin as your digital capital, or the best capital you can allocate, and you have to have long time horizons. Because if your time horizons are a quarter, a year, it's not long enough to allocate substantial funds as a private business, right? Because you have cash flow needs, working capital needs. So you need to have enough capital to put in Bitcoin. I'll give you a live example from our company. So we started buying in 2021. So we bought at around $40,000 per Bitcoin. So we bought at 40, and we kept buying all the way to 16,000. But when I look back, now 4 years went by, our average price between 2021 and 2022 is around $30,000. CAGR, if you put a CAGR on that number, between 30,000 and 80,000, it's like 26%, right? So imagine that. Now, your balance sheet is growing at 26% CAGR. Our business is growing around 30% year over year for the last 5 years. So now you have not just cash sitting earning 3%, but it's earning 25, 26%. And if Bitcoin runs, we can be earning 40%. It's of course unrealized gains, but that's kind of our perspective. So maybe to finish the point is definitely conviction in Bitcoin as a digital capital, but also long time horizons. And you cannot need money, tomorrow once you invest it in Bitcoin. So you have to have at least 4 or 5 years time horizon.
I think this one's working. Hi guys, so similar story to Roland really, and from a similar position in terms of the conviction of myself as a CEO. So I'm the CEO of XC Connecting Excellence Group. We're a public listed operating business with an integrated Bitcoin Treasury. Now, a flagship business, Spencer Riley, I founded that 2014, made the decisions as we went through the years, and 2016 to 2020 became a highly convicted personal Bitcoiner. And then 2021, probably similar time to yourself, I remember it's capital light, the business in headhunting, if you want for a better term. And it's people driven, they drive the revenue. So a lot of business owners in my industry save up cash reserves and eventually at some stage work in the business throughout their career and then self-fund a management buyout. And I was thinking, okay, we're building up cash reserves, but they're depleting in value. And we get to 2020, being a private Bitcoiner, as soon as I saw the reaction to what would have been a serious economic shock, okay, we're quantitative easing, we're increasing the money supply, it was very easy for me to just make the decision on the spot, after Sailor, not before, I have to say, to commit to a full Bitcoin balance sheet for 4 years. So for 4 years as a private business, when we went through the audit for a recent IPO, and with my management accountants at the time, there was periods where we were buying an asset daily and weekly that was drawing down 80% in value. Now, you're not going to convince a board to go in on Bitcoin and then convince them to carry on buying it every day throughout an 80% drawdown. The opportunity lies with the private businesses to move first in this market and start allocating accordingly to their conviction. But what we found over that 4 years, 37% revenue growth, just completely uncorrelated to Bitcoin, the revenue growth, and we're buying more Bitcoin, is there are three main problems in our industry that every owner faces. Is cash, solved by a long-term Bitcoin treasury with a minimum 4-year commitment to get started. And then there's scale, so we're now using it as a public business to put in place performance-based equity incentives that are tax efficient to bring in revenue-generating recruiters, incentivize, motivate, and retain them long-term. So the other additional aspect, when you look one step further than that, is the owners in my industry are very much similar to the position I was in, which is competitors don't buy competitors, and private equity buy one executive recruitment firm and then find out that the best billers go and leave to set up their own business, so they only tend to do it once. We're now building a platform as a PLC where those owners who have got cash-generating businesses can now join the public platform, earn performance-based equity as they move forward throughout their careers, and have an exit to aim for. And we believe that that will actually disrupt the global executive recruitment market and the way in which businesses in our industry are actually thinking about the balance sheets. And I think it's important to just take a step back from just MNAV and Bitcoin per share and just think that there are problems in private businesses and public businesses where if there's a big enough need and a high enough conviction and commitment, you can find the solution to those problems by implementing a Bitcoin balance sheet and using a pristine collateral to drive change and put innovative structures in place that actually drive the operating business growth as a result. So looking at it a little bit differently, and I suppose it protects us from the history saying we have bought all the way through a bear market and all the way back up, bringing a board in, they know where we've been, they know where we're going, and I should think that would make it an easier conversation.
Thanks, Scott. Good afternoon, everyone. Buenas tardes. I'm Jamie Knowles. I am the head of capital markets at Smarter Web. We are a web design and marketing business based in Bristol in the UK. We have over 15 years of operating history, and we have over 250 clients today. We actually started accepting Bitcoin as a payment for services in 2020. And in 2025, we actually shifted officially our primary reserve asset from cash to Bitcoin, just based on the fact that we were continued to believe that the sterling would debase. As of now, since 2025, we currently hold 2,800 odd Bitcoin on our balance sheet, worth $230 million. We're the UK's largest Bitcoin treasury, and we've been using our Bitcoin treasury actively to grow our operating business. We're listed on the London Stock Exchange. Our ticker is SWC/LN, and our primary, or one of our stated ambitions, is to become a leading company within the UK by using Bitcoin on our balance sheet. Now, with that introduction, to go back to Tim's question about what's the main issue that boards are currently facing, and why people aren't willing to adopt Bitcoin as a treasury reserve asset, I think the first thing to explain is that people really need to have the feeling that fiat cash is going to continue to debase. And I think there's still a lot of people out there who have short-term horizons whereby holding cash on the balance sheet on a quarter-to-quarter basis still makes sense. In the UK, the value of the pound has gone down roughly 50% since 2020. And like I said, when you have a short-term horizon, it doesn't feel like it's playing out. But over the longer term, and certainly our decision is that we could continue to see a world where our fiat was getting eroded and made the decision to pivot. I think finally the other two factors are one, culture, and two, career risk. You know, in the UK, we tend to be, by definition, more risk averse. And as a result of that, I think a lot of companies and a lot of boards are just naturally less inclined to accept Bitcoin on the balance sheet and do not want to be a first mover in terms of an advantage. But I hope that, you know, via companies like Smarter Web and Connecting Excellence, we're starting to set the scene that there is a pathway to do that.
So, excuse me. So what's the running joke in the UK? You don't want to be the first mover. You want to be the fifth mover?
Yeah, around the fifth or sixth, I think,
Five.
naturally makes sense, yes.
Charlene, I think most of these guys at least alluded to what they do. Do you want to give us a quick minute on what you do?
Sure, I appreciate that. I'm Charlene Federico, background as a U.S. federal regulator, but I work in the Bitcoin Treasury advisory industry, so I have a company called Mango Digital Strategies. We focus on nonprofits, small family offices, and small businesses kind of moving into the Bitcoin Treasury space, and I focus on the regulatory and compliance work, so both in the UK, Europe, and also mostly in Australia, where I'm based. Thank you.
Awesome. All right, only one question this time, and I think it's a good one, so we can stay focused. How do you distinguish between a treasury strategy that's genuinely creating shareholder value versus one that's just kind of simply riding Bitcoin's price? Maybe this goes into the operating business, maybe it doesn't. Take it where you will.
No, I think that's a great question, and I think that the simple answer is Bitcoin in any form as a portion of your business is going to generate excess value for shareholders over time. So take, for example, a business like Roland's, where they've got the operating cash flow and they're using Bitcoin as their reserve asset. When they've got the excess cash, they're parking it into Bitcoin. That Bitcoin is appreciating over a long period of time, much faster even than the monetary debasement. So if he was to take that same capital and put it into a money market fund, you know, he'd be underperforming significantly over the period of time that he's implemented the strategy. You know, for us, we're a much more active strategy, right? So at Strive, we were the second ever issuer of a perpetual preferred equity. So strategy was first, we came second with SEDA. And so our model is a little different because it relies more on the capital markets activities, and there's arbitrages in the capital markets. But what we do is we take that same idea, right, that compound annual growth rate that Roland had alluded to before, and we look at our cost of capital on any of the securities that we issue, and we look at our assumptions around the compound annual growth rate of Bitcoin, and we're capturing that excess value for our common stockholders. But we changed it a little bit because we issued a second security, which was SEDA, which was the perpetual preferred equity. And that one brings the value of Bitcoin to investors in a very different way, right? There's a big problem out there, particularly in the United States, where we have a huge cohort of individuals that are entering retirement right now. So it's about 11,400 people a day are hitting retirement age in the US. And what tends to happen in your portfolio is you switch into the 60-40 model. And when you leave the workforce, your income's gone. So you still have a need for cash flow. Traditionally, that was coming out of that 40% fixed income component of the portfolio. And as you're drawing on those assets, you start to see that most of the returns you're getting in the fixed income assets aren't even beating the rate of monetary debasement. You know, so if you look at the M2 monetary supply, it's been about 6.7% increase on average. And most of even the high yields are offering around 6%. And so because we believe Bitcoin has the compound annual growth rate of 30%, we're able to carve off 13% of that and issue it to our investors as a fixed income payment, right? It's a dividend paying equity. And that brings a real value to those cohorts that are entering that portion of their life where they need income. They may be believers in Bitcoin, they may not. But we actually see this as a great entry point to people to start to learn about Bitcoin, because where it went before was to the common equities, which are amplified versions of Bitcoin. It's a high volatility instrument, right? It's great for people that are trading or people that have very long-term time horizons. But not everyone can stomach that, and not everyone can even stomach the volatility of Bitcoin itself. And so you're asking yourself, how do we take the value Bitcoin brings and bring it to those people, right? And we need to strip the volatility out of the ride for them so they can see that benefit and move to that next level of wanting to understand the core asset that makes all of this valuable. And so we think that it's an easy on-ramp for people to start learning about Bitcoin while solving a need they have in their everyday life, which is they still have expenses, the money's still debasing, they're still losing their purchasing power over time. This is giving them the ability to stem that bleeding from their portfolio, move into something that offers them an attractive yield, while also, my hope, bringing them to Bitcoin. Because I do believe Bitcoin is the foundational asset that should be foundational to an individual's portfolio, to a corporation's portfolio, or to a nation's portfolio. It's applicable to everybody.
I have a really simple answer to this question, and then I'm going to defer to folks that are actually running Bitcoin Treasury companies. You know, I think that a Bitcoin Treasury strategy makes sense if it is a part of a broader capital allocation strategy. That means that you have a strong operating business. That means you are generating revenues, and you're using Bitcoin to supercharge your position. So that counts if you're public versus private. Kind of that's, you know, my answer across the board. I'm going to defer to folks that are actually running Bitcoin Treasury companies.
So from my point of view, I think Bitcoin is no-brainer to put on a balance sheet with long time horizons, which I already spoke about. But I think in addition to that, products like what Ben offers or Stripe offers, maybe it's not Ben per se, but Stripe offers and Strategy offers, like SATA, like Stretch, it really works in a synergetic way with your Bitcoin strategy, which you cannot put your operating cash in Bitcoin, right? Because you might need it tomorrow, next week, next month. But you can definitely park it in SATA and get 13%. And because the liquid market, you can buy and sell anytime. And now we brought down the spread, trading spreads to, you know, we're trading recently between 99 and 101. That becomes a great vehicle to park your cash short term. So, you know, short term now we have some SATA. We're looking into buying Stretch to park our cash, operating cash. And so I think what you're seeing now, your Bitcoin treasury strategy and derivatives like SATA and Stretch becoming really synergetic and works hand in hand to a growing ecosystem and actually earning return on otherwise, you know, your options on cash, you put in a savings account, you get maybe 2%, maybe T-bills, you know, in the US you get like 4%, or you park it in SATA, you get 13%. And I know you guys, those who didn't attend Ben's earlier presentation, I would recommend go to @Tim Kotzman on X, because he was kind enough to tape it on his phone, and now it's live, and watch Ben's presentation. Was really good about how Stripe, you know, took the whole journey and more about SATA.
Roland, one more thing. I think the most important thing you just said is, you've bought SATA and you're considering Stretch? What was that thought process like of like, I'm deciding on an allocation to SATA, I'm still considering whether I want to allocate to Stretch. Let me know if I'm mischaracterizing this in any way. Right?
Well, I don't want to make it a competition.
Controversy.
I have a feeling he goes out on the risk curve.
No, but I'll tell you why. We actually, I knew the team. I met Ben some years ago now. So I knew the team. I met Matt and Ben and Jeff. So I knew the executive team. I also know some executive team at Strategy as well. But I think what made me first move on SATA is I invested early when we did an IPO, so I actually bought it at a discount. We bought it in a discount. So now our, of course, returns are even higher. You know, we bought it, I think, at $87 at that time. But currently, at current moment, you know, SATA pays a bit more than Stretch. But I think it's a balance. I don't think it's a competition. I think they're complementary products depending on, you know, what you care about. But for us, SATA works.
And Ben never gave XE Connecting Excellence Group a call with that discount, Roland. But yeah, I think when it comes to shareholder value, I go back to first principles when as a Bitcoin investor and as a Bitcoin treasury investor, right at the start with strategy, that was my track capital in the ISA, my SIP in the UK was straight into MicroStrategy in 2020. And when glancing at businesses using Bitcoin on the public markets, my first assessment is not usually what's the business model and how they're generating shareholder value. It's usually who's the team and how high is their conviction, what's their history, and what's their track record. And when you mention about the track record of buying through bear markets, the track record of not having been involved in projects that have been not value aligned with Bitcoin, carries a lot of weight for me when I'm looking at a business and considering an investment. So there's that side of it, and there's a lot of success over the last few years with pure plays, and then you get the traditional investors who are looking at it and saying, well, where's the shareholder value, and assuming that these are risky businesses because they're quite volatile. But I think what they're missing is, and I heard this conversation, I think at London Stock Exchange networking event, just after the Smarter Web IPO, it was, oh, they're looking at it as a bubble, and they're not understanding that it's the pin. And if you look at Bitcoin treasuries now, they're probably at a similar stage in their wider understanding in the investor space as Bitcoin was itself in about 2013. So when you're looking at shareholder value, I think each iteration takes us a step forward and finds more solutions. And for us, for shareholder value, we believe we've developed a model with XE that aligns the team internally and the people who are directly responsible for generating revenue, profit, and EBITDA value, and the team who we attract into the business and the acquisitions that we attract into the group, aligning their values and aligning their incentives with the shareholders by integrating the Bitcoin treasury. And the stronger that operating business becomes over the next 5-10 years, the more attractive it becomes to more revenue generating recruiters and more acquisitions, and the more robust and credible the Bitcoin treasury becomes to the capital markets. And the more the Bitcoin treasury becomes attractive to the capital markets, vice versa, the more attractive the operating business becomes to other businesses at a larger scale in our industry. And I think it's about finding those ways to just align the incentives and align shareholder value with the teams in the business. And you see a lot of businesses in this industry where the teams are very, I suppose, personally highly committed to the companies as well. So there's another sign.
Scott, this is all awesome. Just as a side note, at some point I want to get you and Ben and see who can filibuster longer. I just think it'd be fun. It's a compliment. It's a compliment. It's a compliment. Over to you, Jamie.
Thank you. So when we think about shareholder value at Smarter Web, what we've been very unique in doing is using our equity, which is backed by the Bitcoin on our balance sheet, to fund mergers and acquisitions. As I said at the start, we're a web design and marketing business. When we relisted on the LSE in February of this year, we had a publicly stated acquisition strategy where we would use our equity to help buy or to buy businesses within the same sector as us. So one of the key things that we have done is use our equity, again, backed by the Bitcoin, as a strategic acquisition currency. And I think that's something that's going to continue to play out in the sector. You guys at Strive obviously were involved with Semler, et cetera, as another public-to-public acquisition. So with us, we were able to buy this year another web design and marketing business called Squarebird, where for 1% of our balance sheet at the time, it effectively 10x'd our operating revenue. And we basically modeled that we had an estimated payback of around 3 to 4 years. It helped significantly increase our revenues. It contributed extensively towards covering the operating costs of our business. And we think that this is going to be a way that Bitcoin treasury companies will be able to use Bitcoin on their balance sheet to generate shareholder value once they've reached sufficient scale.
Awesome. We have a few minutes left, and as much as I think it'd be cool to go over time, I want to be respectful. So the last question is 3 questions. So the first one's going to be around advice. The second one's going to be around clarity. And the third one's going to be around the future. So what's one piece of advice for the CFO or the business owner in this room who might still be on the fence? Has any of the regulatory clarity, I'm speaking mostly in the United States, has that made your business easier, harder, or no difference? And what are you most excited about in the industry right now, heading into the future?
You know, the first advice that I would give to most of the business owners is don't forget what got you to a successful business in the first place. And that was taking chances, taking risks, right? Being willing to see things differently than other people. And I've really seen an emergence of that in the Bitcoin space in particular. You know, I was talking to a guy and he runs a large investment fund, but one thing that they were doing was they were starting to build Bitcoin in as a part of the long-term compensation structures of key employees at companies. So they were giving them the ability to benefit from the upside, similar to the way that you would see with options in the past. And so people are innovating with Bitcoin, right? The idea we went after with digital credit, that's one idea, but it's one of thousands of ideas. And the fact that we have all these brilliant minds out here thinking about Bitcoin and looking for the best way to integrate Bitcoin, I think is going to breed a lot of creativity into the space. So I would say you've got to remember what got you there. When companies mature, they tend to take their foot off the gas. They tend to forget that they became the company they are because they took a risk at some point in time. And I think that's how a lot of them are viewing Bitcoin. They're viewing it as a risk. So it's an education, right? Volatility is not the same thing as risk, and it's remembering what got you there in the first place. The other ones I'll let other people answer, otherwise I'm going to take up the whole time here.
I'll jump in before we get to the regulatory one then. When it comes to advice for CFOs or for business owners considering it, if you've decided that you want to allocate and you're not in a fortunate position where you're 100% shareholder and you can just do it that day, there is no risk to just opening up the channels to begin being able to buy Bitcoin. And once you're at the stage where you can buy Bitcoin, a test buy might move the needle a little bit in your firm. And from point of view of actually allocation, just match the allocation to your conviction. If your conviction's at 1%, make a 1% a month allocation from your free-flowing cash flows. If it's at 5%, put it at 5%. But have a time horizon where you're going to keep purchasing the Bitcoin. Minimum 4 years, I would probably suggest, and keep doing it throughout that period. And if you're a business owner and you're based in Britain, my advice is usually do 70% of your revenue overseas and hold all of your money in Bitcoin if you're happy to do so.
I'll jump in on the advice thing. I think I would say lean into the human capital side of Bitcoin. One of the nice things about the Bitcoin Treasury industry is that, you know, we all work together and, you know, folks are very supportive. You know, there's many conferences and summits that are in this space, and I think that you heard about some of the innovative products. Learn from your peers and just know that the strategy is not right for everybody, so you want to right size your Bitcoin Treasury strategy to your values, the caliber of your team, your risk appetite, and kind of where you want to grow your business. The other thing I would say is, if I were you and I was starting as a CFO, I would start by doing the stress testing. Start by stress testing 100% drawdown. If your entire portfolio goes to zero, can you run your business? And make sure you're comfortable with that allocation, because you want to just be able to build to the absolute lowest common denominator. And once you have that confidence, then you can very easily go to your board, go to your auditor, go to your legal, go to your compliance folks. And then just really briefly on the regulatory piece, I'm very excited about the pace of regulatory change around the world. It has made institutional adoption 100% easier. Here at MICA, people don't love it, but it is the first time there's a comprehensive framework for digital assets in the UK. In Europe. That's amazing. In Australia, just this April, there's been same thing, a comprehensive digital assets framework in in Australia. And in the United States, we have the Genius Act and the Clarity Act. When we have regulatory clarity, institutions get comfortable, sovereign wealth funds get comfortable, huge, large pension funds get comfortable, and we get that kind of Bitcoin adoption that we've all been waiting for. So I think that the pace of regulatory change has been incredible. The intention that you're seeing from all around the world. Bitcoin Treasuries used to be a U.S. story. Happily, now it's a global conversation. That's the way it should be, and I think that will just continue.
All right, I'll have maybe a couple points. So the most important advice I have, get some Bitcoin socks. So when you wake up every morning and put them on, you remember to buy some Bitcoin. So that's kind of the most important one, I think. The second one, I think, to message to CEOs, CFOs, boards, I would like to invest, not treating Bitcoin as a risk asset, but I think you cannot afford not to put some Bitcoin on, because 5 years later, your shareholders will come to you and say, why the hell did you guys didn't propose and buy some Bitcoin, right? Because like early adopters did, Ben did, and we all did, and why didn't you do it? So I think you should be buying, and you cannot afford not to buy it. And maybe last point on US, big banks are coming, from being Bitcoin as a Ponzi scheme to now, all the big banks, JP Morgan, Citibanks, Goldman Sachs, we all hiring, we all adapting Bitcoin, we all planning to custody Bitcoin. So Bitcoin is here, and I think the earlier you are, the better returns, potential returns will be.
Cheers, Roland. Just very quickly, Tim, I think when you're trying to convince people either on your board or in your company, the key thing is to have patience. There's naturally a lot of people that get the Bitcoin overnight, I get it moment, but for a lot of people, it's very hard to expect them to take that leap of faith. And so it has to be an iterative process, a little bit at a time. And certainly one of the things that I've noticed is that by giving them very good specific content, it can help get them there. So don't just say to your CFO, well, go read about it. Make sure he goes and reads something that you think was applicable to you for an hour, and then come back and discuss it. Maybe he takes another step forward, or they take 2 steps back, but then they can go 1 step forward after you give them some more content. And it requires patience. Finally, just on the UK regulatory landscape, I think we've actually, I know the UK gets a hard time about a lot of things, but we've actually been, consistently pleased with the developments in our interactions with the regulators in the UK. We're naturally behind the US in a lot of aspects, but I think we're making steps in the right direction. I think, digital assets and Bitcoin in the UK does have a bright future.
Awesome. Well, you heard it here first. Bitcoin Treasuries is going global. Follow all these guys on social media, and please, a round of applause for our panelists. Thank you.